Start. Now, welcome to the channel. So today we're going to be covering the first part of a series of technical analysis lessons. If you are listening live on YouTube, feel free to jot down any questions in the chat window. We will try to answer all your questions at the end of the lesson. Now, this lesson specifically is going to be on support and resistance, one of the key components of technical analysis. And I'll just start off by explaining a little bit about ourselves. So, my name is TJ, and we have a community called United Traders. And what makes our community unique is the willingness of our members to work collectively with a combined goal of making a generational shift in financial literacy and, of course, an abundance of wealth. Now, we do this by taking a holistic approach into educating our members about personal finance, portfolio management, hedging uncertain times, psychology, risk and trade management, which ultimately will result in our members reaching their financial goals. Now, there's a lot of things that make United Traders great, but we do not have the time to list it all. Here are the 6 things that really drive our community. We are team-oriented, which means we work collectively as a single unit, kind of like a hedge fund. And in that environment, you are putting yourself in a position to succeed because you have like-minded individuals that have one goal, and collectively we have more eyes on the market, which results in more money for us, right? Now, the second thing that's the most vital part of our team is the education. We provide live lessons just like today, and we have an extensive library of the best resources that will provide you with a competitive edge. And let's say you're still working your 9 to 5. That is perfectly fine. I have built portfolios in the past with a proven track record of beating not only the market but even the top hedge funds. Currently, we are actually working as a team on a model portfolio for you guys, and that should be released by the first week of January. And we also have swing trade alerts. So we use a state-of-the-art real-time valuation model, providing data-driven trading ideas with the highest profit potential and the lowest risk. Our members are well versed in macro and microeconomics, so we're able to give you market relevant insight in a way that most market participants don't really understand to an extent. And the 6th thing is our trade idea scanner. So this is a prominent scanner that a lot of traders use. This specific scanner is using my proprietary trade idea inputs, which have been back tested with proven results. And where do you start? So if you'd like to join our community, first thing you should do is join our Discord group. Second, we would appreciate it if you could follow us on social media and help us by spreading the word. We can reach so many people just like yourself that are looking to find an edge. And the link will also be in the bio. All right, and I won't bore you by reading the entire disclosure. You guys could read that on your own. However, I will mention that United Traders and its members are not responsible for any investment decisions made using the information provided. Trade at your own risk. You must make an independent decision regarding investment or strategies mentioned at UT. All right, so I'd like to introduce you guys to Aman, and many of you know him from his Discord handle, Drados. Iman will be conducting the lesson on support and resistance and trading strategies, and how you can incorporate it into your arsenal of trading tools. So Iman not only trades with us live on voice chat on a daily basis, but he also is on double duty watching over his firstborn son. And he was generous enough to put together this lesson for us. Now that is Persian hospitality at its finest. And it speaks volume about his character as well. Now, if his wife is listening in, I just want to tell you thank you for letting us steal Aman from you for hours on end, and also that he's a lucky man. Now, Aman is currently working at Comcast Business as a as a department manager, and Iman is a true master of volume price analysis and candlestick charting. Fun fact about Iman, he can play the piano. Alright, Aman, you can take this away. I'll stop my stream.
Yes, sir. Thanks, TJ. What's cracking? What's up, everybody? Can everybody hear me? Yes? Cool. All right. So thank you guys for having me. Thanks, TJ, for the beautiful introduction. Let me go ahead and share my screen, and then we'll jump in and get started, you guys. So I hope everybody's having a good night, and thank you for taking time out of your day to join us. So I'm going to share my screen now. All right. There we go. Cool. So you guys, I know we had a lesson last week on Fibonacci. So I know this isn't as detailed into in-depth advanced Fibonacci, stuff like that. This is a little bit more basic, but we got to start from somewhere. And I think it's very important for us to start with the basics because as basic as they are so important. And going over this stuff, and I even catch myself sometimes at night just rereading, TA handbooks, stuff like that, because there's certain things that I forget because there's so much going on these charts that we tend to miss the little things that are actually the most important but the most basic. So we'll jump into it. We'll talk a little bit about support and resistance. We'll talk a little bit about trend lines. We'll go over dynamic versus static support and resistance, so you guys can get an idea of what to look for as far as both these things. And then we'll go into some trading strategies, and hopefully you can kind of pick one that works best for you, or you learn all of them, and add it to your arsenal of tools when you're trading. And then we'll finish with some questions. So we'll jump in and get started. At the end of it, when we're all done, we'll switch over to Thinkorswim, because I know a lot of you guys use that platform, and we'll kind of go over some examples. And I'll let you guys ask me some questions, and TJ's here too, and we'll answer any questions for you guys that you guys have regarding it. And like TJ said, this will be a series, and we'll kind of evolve this into some more in-depth stuff, whether it's volume profile, pattern, trading patterns, stuff like that. So again, thank you guys for joining us. Let's get started. So support and resistance, you guys, it really is the most widely used technical analysis across the board from any day trader or any swing trader or any long-term trader, right? And to put in perspective, if you look at any chart, you will always see defined levels where for some reason, you ask yourself, if you've never learned this stuff before, is why does this candle always go here and then move back? Or why does this candle always push below this and then it knifes down, or whatever it is, right? Those are the first questions you ask yourself whenever you look at a chart. And the reason simply is that every single person is looking at these same levels, and that's why price moves at these levels. So resistance itself really is just a level that represents a price point that an asset has had trouble exceeding in the time period. And to put it into trading terms, it's because of an excess in supply during an uptrend. And what that means is that all of these stocks are being bought up, right? You're buying up all these stocks, you're going up, you're getting to the top of this trend, and now there's nobody left to buy, right? Nobody wants to buy the stock anymore. And now everybody's like, hey, I have all this excess stock, now let me sell it. So then they start selling it, and then that's when the stock pushes back down. And then that pushes us down to our support level. And it's really just the opposite, as simple as that, right? It's where an asset struggles to fall below because there's an excess of demand. This is really where people want to start buying in at the price point. This is where people feel like the price point is at a reasonable level, and this is where they push the price back up. And so it's pretty simple, but in all fairness, outside of all the supply and demand stuff, really is it's two levels where we call a range. You're always trading in a range, and at these levels, people want to buy at the support and people want to sell at the resistance, and it's as simple as that. So now let's move on. And so really the real question is, you guys, is how do you draw support and resistance? And I think it's very important because I know you guys have seen a lot of charts, and I've seen a lot of charts, especially in Discord. And sometimes it's very simple, and sometimes there's 1,000 lines, right? And there's an acronym, and I know some of you guys use this. It's called KISS, right? Keep it simple, stupid. And so I'll use that terminology in this sense because it's very, very, very important to keep your support and resistance trend lines very, very simple. And it's really to your benefit, because what you don't want to do is look at a chart and you're wondering whether or not you should buy and sell at 20 cents, or you should buy and sell at 30 cents or 40 cents because you see some sort of rejection at these levels, right? We want to look for key levels. We want to start at the largest time frame. This specific AMD chart's at the 4-hour time frame. You can use the daily. I like the 4-hour a little bit better because it gives you a little bit more of accents as far as the lines goes. But you can use any time you like. And then you want to use the price line tool, not the trend line tool, unless you have really, really good and stable hands. Because I find it very, very hard to drag a line from the left side to the right side on a trend line. You want to draw the most obvious levels. And the reason why you want to draw the most obvious levels is really, really because of the psychological aspect of it. You want to ask yourself, what are the other traders seeing? What are the other traders putting their levels at, right? And really, it's the most basic stuff that you're looking at. And you want to touch as many rejection candles as possible, body or wick. But again, you want to be kind of conservative in a sense that you don't want to be halfway into a wick, right? So always make sure it's at a good level. And you want to try to use whole numbers. I know you hear TJ and the UT team really talk about increments of 5, whole dollars. Especially in larger caps, you want to always try to get a whole dollar or an increment of 5. Those are typically the best levels, and a very psychological level when you get to that. Those dollar amounts. And then anything lower caps, I usually say under $100. Multiples of 50 cents is great. AMD is a great example of that. And I know a lot of you guys trade AMD during the day, and you can notice these levels down here. We have a heavy level here at 74. And if you count this, 1, 2, right? Some people say, well, this doesn't look like a level. So look at this, right? This doesn't look like a level because, it looks like the candle breaks through, right? But that's why the level is so much more important, because this was a level where, because it didn't hold, you saw a really heavy push down. We call this an inflection point, right? So this was where the battle happened. There's another level here, and then at the 50-cent level, we have it again, right? An inflection point, because you have 3 touches here, and then a huge, huge knife up, right? And across the board. So you guys can see it on your own. It's pretty simple and straightforward. An inflection point, you guys, you hear us talk about it a lot. It's in our UT watch list. An inflection point is where the battle happens, right? It's really where the battle happens. It's when you're looking at a 1-minute chart or a 5-minute chart, and you're seeing if you know the terminology, an ascending triangle, right? You have a resistance level, you have price pushing up into it, it's polarizing to this resistance level, then it's pushing down. That battle is happening at that resistance level. And once that level breaks, that inflection point breaks, every single person that was on the opposite side of that is now going to cover their positions, and that's why the price pushes up even further, right? And so that's why these inflection points are so important. And we'll go over that a little bit more a little bit later. So hopefully that was simple for you guys. And again, if you have questions, just wait till the end, and I can answer anything for you guys that you'd like. So now let's talk about trend lines, right? So we have horizontal support and resistance levels, and then we have trend lines, right? So a trend line really, you guys, is a diagonal line drawn over pivot highs or pivot lows in the prevailing direction of price action or the trend. And they're a visual representation of support and resistance in any time frame regarding that trend. And it may change, right? I may be looking at a 1 minute chart and it looks like the trend is a downtrend, for example, on this, or I may be looking at a 4 hour chart or a 1 hour chart or a 30-minute chart and my trend line is still an uptrend, right? So a lot of it is very subjective depending on the time frame. But seeing multi-time frame analysis and understanding the overall trend can really help you in that stuff. But that's a little bit deeper, and we can address that stuff a little bit later. So what we call it here, so if you guys look at this right here, this is a downtrend. And we'll go into a little bit of how to draw these downtrend lines. But as you can see, the price starts at 395, it drops down, it pulls back, and then it pulls back again, and then it drops down again, and it pulls back again, right? And so it's polarizing to this trend line. And I'm sure you guys have seen on many charts where you're like, oh my God, this thing bounced off this line multiple times. How did I not know that? Like, why couldn't I predict that? And once we see it, it's kind of like aha moment. But this is what we call a downtrend. Now, what we call a bullish break and is a potential reversal of trend. And so if you look down here, the candlestick has to break over the trend line and close over it, right? There's a lot of times you're going to see where the candlestick will break over it. And then all of a sudden, everybody kind of gets that FOMO, like, oh my God, okay, the trend is changing. I want to get in on this breakout, and they'll buy, right? But you have to wait for the candlestick to close because you'll get a fake out, and then it'll drop back below, and then it'll continue its trend, and that happens very often. So we'll go over some more of this stuff here in a little bit. Cool. And so now we have an uptrend, right? So an uptrend is exactly the same. But we call this I call this a bearish break, right? So if you look up here at the very top, look at all these bounces, 1, 2, 3, 4, 5, 6 bounces. Then it starts really polarizing at this level on this trend line, right? Not only does it start polarizing, but if you look closely, these wicks and these candles are getting tighter and tighter. And so what that tells me is there's a big battle happening right here, right? We don't see volume, so I can't be subjective on the volume aspect of it. But if I was just looking at it from this specifically, there's a battle happening. So I want to look for here for a break and a close over for a trend directional change. And so that happened right here. So you see here, this red candle changed, pushed up a little bit, couldn't break back over, and then boom, right? This is where a lot of people, and we'll talk about this strategy as we talk about trading strategies. So trend lines are very important, you guys, because you're going to see so many trend lines, especially if you look at the 1 minute. If you're looking at a 1 minute chart, you're going to see a trend line break probably every 30 to 45 minutes, right? And it's very important to notice those things because it can really give you an idea of how strong the trend is. And it can also give you an idea of where you need to enter or exit your trades. And we'll talk about that also a little bit later when we talk about trading strategies. So cool. So now let's talk a little bit about how to draw a trend line. It's really dependent on the time frame is dependent on trading strategy. So if you ask me, Iman, do I use 1 minute, 5 minute, do I use 30 minute, do I use 1 hour? That's up to you. If you're a swing trader, you want to use obviously a higher time frame, right? Whether it's 30 minute, 1 hour, 4 hour. If you're a long-term investor, right? If you're looking for stuff to hold for a year or longer than that, you definitely want to look at the big picture. So you want to use maybe the weekly or the monthly, whatever that is, right? So really that's very subjective. So you want to use the trend line tool, not the price line tool, because that doesn't move diagonally, obviously. And then you want to identify the trend points. And so for an uptrend, you want to make sure you have at least 2 swing lows. For a downtrend, you want to have at least 2 swing highs. And the next slide, we'll go over this in detail. And for you to confirm the trend, you want to have that third swing, right? And then once you get that third swing, you want to adjust the line as close as you can. And that basically is a trend line. And the price action, as you'll notice, will bounce off of these, what we call support and resistance levels as the price moves in the dominant direction. And then once that trend line is broken, a new trend line must be established, which typically happens within the next 10 candles or so, depending on your time frame. I'm talking 1 minute. So, and then the support level is obviously below under the price action, and the resistance level is above the price action. So pretty straightforward. And so here we have some examples. So And I'll show you guys this too when we go into TOS a little bit, right? So here's a downtrend that just finished, right? So if you look at this, if I would have had this straight down, closed over, boom. So now this is the start of a new trend. So now this is the first swing high. This is the second swing high. I want to identify those two levels first, right? Then I want to draw a line through them. So here's the line that goes through them. Now what I want to do is I want to follow this price action, right? If you notice here, it pulled back one more time. And then if you notice here, it pulled back a fourth time. Boom. And then the boom. Once this candle broke and closed over, this is when, to me, I said, okay, this trend is invalidated. This may not be a downtrend anymore. Maybe I should take some profits here, right? Depending on my trading strategy. And there's a term that everybody says all the time, and it's resistance becomes support and support becomes resistance. And you see that very, very, very often with trend lines, as you can see here, right? So we had another bounce off this trend line, then a push up, then another bounce off this trend line, and then cool, and then a new trend was created right here, boom, and then broken again right here. So it's very, very hard to see in the moment, right? Because you're very emotional as far as, okay, I'm in the stock right now. My money's going up. My money's going down. When should I exit? When should I enter? And it's really hard to focus on these, on putting these lines in. And so as you practice more and more, it'll become easier for you. But this is the most important part, in my opinion, in day trading, right? Swing trading, I would say not as much, long-term trading, not as much. But if you're day trading, if you're scalping, if you're buying pullbacks, if you're following a trend, it's so important to understand these trend lines and know how to draw them. So hopefully that was straightforward to you guys. All right, so dynamic versus static. So go ahead, you guys, in the chat before I put this up, and let's get a little bit of participation here. Who can tell me what a dynamic level is as far as support and resistance? Yep, so Joel said a moving average, so that's great. VWAP, that's great, moving average, VWAP. And so if you were to define it as far as a phrase, what would it be? Several indicators. So you guys have it as far as the indicators. Dynamic changes, perfect. Perfect. So basically, a dynamic level, support and resistance levels that change with time. And you guys hit it on the nose, right? Moving averages, VWAPs, right? All that good stuff that as you move throughout the day adjusts with wherever the price action moves. Those are dynamic levels, right? And so the benefit of these levels is, similar to trend lines, they're useful in identifying trend reversals or continuations, and really good to identify areas to take profit or exit positions. And you guys notice this, if for those of you who have been trading for a longer period of time, and maybe even newer traders that are looking at charts, price really tends to pull back to these levels, right? VWAP, you guys, is volume weighted average price, in case anybody doesn't know what that means. MA is moving average, in case anybody doesn't know what that means. And you'll notice that the farther away the price gets from these levels, the more likely it's going to be to pull back to these levels. And you guys will notice these on your charts. So cool. So now who can tell me what static is on the other side? What is that? What is a static support resistance level? Fixed. Trend lines, pivot points. Yeah, exactly. You guys hit it on the nail. So static is support resistance levels that do not change with time, right? Volume profile, pivot points, trend lines, anything, highs and lows, right, of the new day, those don't change, right? Anything that on that day doesn't change becomes a static level, right? And you have some static levels that are same day static, like for example, highs and lows, right? I want to know the highs and lows of the previous day, so I'm going to put it on my chart for today. That's static for that day, but that changes with time. But then you have something like volume profile or trend lines, or support and resistance levels that are horizontal, and those typically don't change with time. Those typically stay exactly the same. Actually, not typically, they do. So pretty awesome. They're really useful in identifying areas to enter or exit positions. Um, and that's one of the really, I say, best risk and reward strategies is really utilizing static levels to enter and exit trades. It's best risk to reward, in my opinion. And we talk about that all the time. So horizontal levels, trend lines, volume profile. So I have those on here as examples. So Fibonacci, yeah, so awesome. Cool, so here's an example, you guys. So for those of you, obviously, that have been trading for a while, this is very normal to you. For some of the newer traders, you may have seen this stuff. So here's the VWAP, it's the purple dotted line. And this changes as the day moves on, with the location of it. And then here's the 20 moving average here that changes as well. And then the 200 moving average that changes as well. And so what is the rule of thumb as far as the 200 moving average? If you want to see the direction of the trend, what is a rule of thumb that you hear all the time? Yeah, above or below, long over, short under. So basically, if you have an asset that's trading above the 200 moving average, it's typically in an uptrend. Exactly, Joel. Exactly. And if it's trading below it, it's typically in a downtrend, right? Same with VWAP. And so when you have two of them working in conjunction with each other, this chart right here, it's under the moving average, but it's still above the VWAP. And so you hear us talking a lot about stuff working together. And so that's why it's so important not to use just one indicator. You have to be very intentional on really utilizing multiple indicators to identify real direction of trend and what you should be doing within the price action while it's moving throughout the day. So, and it is, yeah, back to you. Absolutely. And so these are lagging indicators. And so what that means is, for example, you'll see some strategies where somebody's like, hey, why don't you sell, when this green drops below this blue, then that means that the downtrend is going to start. So you should sell, right? And I'm sure you guys hear that all the time. Or when this green pops above the blue, that's in an uptrend. So you should buy. Unfortunately, price action tends to move faster than these moving averages. And so it's not that easy. So when you use it in conjunction with support and resistance levels that are static, volume profile, stuff like that, it makes it easier for you to be confident in trading in that direction. And so great call out. I appreciate that. Perfect. So let's move over to static levels. So static levels, pretty straightforward, you guys. This is volume profile. And if anybody doesn't know what volume profile is basically in the lifetime of the stock, depending on the time frame and the chart that you're looking at, that's how much volume is coming in at that price point. And so if you notice here, this price point has a ton of volume that comes in whenever it hits it. This price point has a ton of volume that comes in whenever it hits it. This one, not so much. This one, not so much. And then these are the support and resistance levels, right? And if you notice, they fall into conjunction with these volume profile levels, right? This is where the battle happens. This is where the buying and selling is happening, right? To either push the price above or below this line. And so it's very, very important for you guys to not only just look at these, because you may very well have a support and resistance level, let's look down here, that is a little bit weaker on the volume profile, right? The battle doesn't happen as much here, right? But if my price is pushing up to here, and I see these levels, I know that there's going to be some sort of resistance happening where if I'm in a long position, I need to ensure that I'm watching this stock to see whether or not I need to take profits, or if volume is telling me that this is going to push over in continuation, right? And so that's very, very important to use both in conjunction. So, and you guys can ask us questions about volume profile and all that stuff as we continue. So another thing I want to point out here, you guys, is the reason why these levels aren't as important is because it hasn't pushed up to these levels as much. If this had 4 touches or 5 touches at this level, this volume profile would probably be out to here, right? The reason why these volume profile levels are stronger is because this is the range that it's been trading in. And so that's why you know, okay, there's a lot of people who have taken positions here and a lot of people who have taken positions here. And so when this asset comes from here all the way down to here, these people are going to buy and try to defend their positions because they don't want it to fall below. Why? Because all of their stops are right here, right? Anybody in these 5 times that people bought and pushed the stock back up, that's a lot of people who bought here, right? And if I'm saying, hey, you know what? I'm going to hold this long. Where am I going to put my stop? I'm going to put my stop right under it, right? I'm going to put my stop right under it. And that's why, for example, right here, when this dropped down here, you saw this price break and then boom, look at that gap down. Heavy, heavy gap down. And that's because it triggered all of these stops in this consolidation area when people bought at this price point, right? This is a heavy ascending triangle consolidation area where multiple people purchased this price and they were long. And these people are like, okay, well, I'm going to carry this up. It's okay. I'm still good. All right, it dropped a little bit. That's all right. You know, this is where I bought it at. I'm good. It's going to go back up. Okay, it dropped a little bit more. All right, it could go back up. Okay, cool. Well, this is my break even. My stop's here. Boom, gap down. So that's the psychological impact of support and resistance levels, you guys. It's really understanding, not just, okay, this is where I should buy, this is where I should sell. It's understanding that if it breaks these levels, this is going to psychologically impact the people who either purchased shares or sold shares at this level. And so it's very, very, very important for you guys to really understand that as you're purchasing and setting your stop loss, because if everybody else has their stop loss right here, but you don't set one, by the time you're ready to sell your stock, that stock's going to be down here, right? So you really have to make sure that you set your stop losses when you're buying at these levels. So hopefully I know that I jabbered on a little bit on that, but this is so important, right? It's not just understanding these levels. It's really understanding what people are doing when these levels are broken. So cool. So what are some trading strategies, you guys? There's 4 really popular trading strategies. And I know you guys have probably seen all these, read all these, and all that good stuff. And so the range trading strategy, that's a UT, basically the go-to strategy, right? And really what the strategy is you buy and sell at static support and resistance locations. So if I go back, right, you are only going to be buying when the price comes to here, and you're only going to be selling when the price hits here or the price hits here, right? And you can be buying more here if you wanted to, if the price came down here and you wanted to push it back up. And so the reason why this is the best risk to reward is because all of this noise and all of this lack of volume is taken out. You already know that at these levels, these people are stepping in to purchase, right? You already know that. Why? Because you see these levels. And so for you to enter a position here and set a stop right below it, right? Maybe at $1 or maybe at 50 cents, your risk to reward 50 cents to a whole $3 is huge, right? And so that's why when you see a lot of things trading in ranges, it's because people are buying at the support and selling at the resistance, and it goes back and forth and back and forth and back and forth. And so I would definitely say that that's the best possible risk to reward strategy. And yeah, so the next change strategy is the static pullback strategy. So this one is basically the strategy where you wait for a breakout and then you wait for a retest and then you buy on the retest. And so if we go back again, let's look at, for example, so right here. Okay. So this price broke over, it retested this trend line area, and then it skyrocketed, right? So that's another trading strategy. You wait for a breakout of one of these static levels, and then you wait for it to retest that level. Support becomes resistance, resistance becomes support, and then you purchase, we either sell or buy at that level. So that's another trading strategy. The trendline strategy. Okay, so this strategy If you guys are familiar with patterns, if you guys are familiar with any of that stuff, this is basically what the trendline strategy is that when you see a pattern or when you see a trendline, once you see the break and close over that trendline, people call this breakout trading. You want to buy either right before it breaks that trendline because you think it's going to do it, and then put a stop directly under it, or you want to buy when it closes over that trendline for the breakout, right? And so a lot of people use the strategy because this strategy happens a lot more often within time frames, whether it's an ascending triangle, a wedge, head and shoulders, whatever it is, right? And so a lot of people use that strategy as well. It's a little bit tougher because you really have to keep your eye on it while it's happening. But again, it's a good strategy from what I've seen. So cool. And then so moving average strategy, you guys. So you guys have seen this a lot, right? When a stock breaks out at open and all of a sudden it's 20% up for the day, and then you look back at it, you see that every time it pulls back to a dynamic support or resistance level, right? So basically you'll get a breakout, and I'll show you guys this when we go to TOS. You'll get a breakout, you'll get a hard push up, parabolic push up, and then you get a hard pullback to either the 20 moving average, the VWAP. And then you'll get another hard push up, right? And so a lot of these, and if you guys have ever seen, some of these traders online that trade penny stocks, they trade these high volatility penny stocks and look for the ones that have that upward momentum, and they buy on the pullbacks, right? They buy on the pullback to the VWAP. They buy on the pullback to the 20 moving average or the 200 moving average. And so it works well. It's a lot tougher. And the reason why it's a lot tougher is because something can break through that and switch direction of trend very easily. And so if you don't have your stop set tight, you can lose a lot of money. So there's a lot of stuff. So those are the trading strategies. So a lot of good stuff there. And my recommendation, and I know TJ's recommendation as well, and a lot of us at UT is, if you're newer and you're still learning a lot of this stuff, right, really just focus on buying and selling at the static support levels. It's so much easier. Your risk is so much lower. The price action tends to slow down at these levels, so it's easier to watch. Versus if I do a trendline breakout and it's a fake breakout, and then all of a sudden it knifes down, I couldn't see that, right? But if I'm trading a range and it's at one of these high volume levels, it's probably going to sit in that range for a few minutes where I can actually see what's going on and make a good decision if it's going the opposite direction. And so really, really good for newer traders. And even we do it often. So I would say just for everybody. So cool. So you guys, so let's switch over to TOS. Any questions that you guys might have so we can kind of go through it on TOS or any of this stuff? And TJ, is there anything that you wanted to add as far as what we went through?
Oh no, you covered everything amazingly. So thank you.
Yeah. Cool. Well, let's jump over to TOS real quick. And usually I use black, just so you guys know. I don't usually use white, but TJ likes white. So, and so here we have. Chris asked the question. So how often do you remove and add a new trend line, right? So that there's two parts to that. So how often do you remove a static horizontal level? Never, right? If it's hit it multiple times, it's probably going to hit it again. Leave it on your chart, and more than likely it'll hit it again, right? How often do you change trend lines? Very often, right? So let's jump down here to the 1 minute chart here, right? And so this is 7 a.m. here to 2. And so if I'm drawing this from the beginning of the day, I'm drawing this here.
Oh, it's still stuck on the stream.
Oh, hold on. Let me sure. Do you guys see it?
Yep, we're good.
Cool. All right. So if I'm trading, so NVIDIA open for the day, it's 7:30, my time 7:30. So that's why it's 7:30 here. And so I'm identifying a trend first, right? So I see 2 down. All of a sudden I see higher low, right here, higher low here, but then that breaks, right? So that's one right there, right? So this trend was invalidated, right? Then right here, it's a little bit of consolidation. And then really here's where I see the first swing low, second swing low. So here's another trend line, right? So as this is going up, this is the trend line, right? Once this breaks below here, this trend line is invalidated. But you guys will notice that if this price action ever moves up here, it actually may respect this trend line, right? If I pull this out here, and this is a little bit more advanced and can get a little bit more confusing. I don't recommend you doing this if you're just starting and you can get confused with lines. But breakout, retest, and then new trend. But very many times, if this price action was to move up here, it would respect this trend line, right? And so that's why sometimes it's important to go back and say, okay, this price action's up here. Can I catch a line through this to the new price action, right? So yeah, so to answer your question, trend lines, I mean, already one trend line, two trend line, three trend lines, right? 4, 5, 6, 7. So I mean, it very often, right? This is a big one right here. This is a huge one, right? And just so you guys know, it doesn't necessarily mean that the trend is going to change either, right? For example, right here, I mean, you would think that after this $20 drop, that this trend was going to change once it broke over. Well, sure as heck didn't, because it went back down, right? And so it's not a 100% confirmation, right? You really want to use your other indicators, but really just make sure that you guys understand that it's not a guarantee, so you don't go all in on a trend line break, right? So cool. So we have a question. So what's an inflection point? So I think earlier I talked about it a little bit. So let's look at the 4-hour level, right? And so we talk about inflection points often. So an inflection point is really a level where the battles happen, right? And I say the battles happen is because that's the level where if it goes below it, then anybody who was long is going to is going to sell their position, and they're not going to battle anymore. Or if it goes over it, anybody who was short is going to cover their position, and they're not going to battle anymore, and the price is going to go up. And so if you look at this, and it really coincides a lot with these volume profile levels, right? Because this is telling me that there's no bias here, right? There's no buy or sell bias here. This is buyers and sellers coming in right here, trying to move that price of the stock in their direction, right? And so, for example, and you always want to use whole numbers on something this high. I preferably like multiples of 5, so 540, for example. And that's my own rule. So make sure you switch to price trend line. So 540. And so here's something that's very important. And you guys, if you see this on your chart, it means that this is a fighting level, right? Right here. And it may seem very small, and it may seem like nothing, right? And let me circle it. But this level is very important, right? The reason why this level is very important was because price action polarized to this level. There was a battle to push the price back down, push the price back up, and then once it broke over, boom, right? And so this is a very heavy inflection point right here. And as you see, this was the first inflection point that was made. It respects this level right here, respects this level. I would say this respects this level, respects this level, respects this level, respects this level, all the way down, right? And so you just want to look for areas on the chart where you notice that there's a battle going on, and really want to try to make it a whole number. And that's an inflection point. It's as simple as that, right? It's basically says, hey, if this drops below this, people who are long are going to sell their positions. And if it goes above it, people who are short are going to cover, and the price is going to, I don't want to say skyrocket, but it's going to push harder in that direction because of these positions being covered. Does that answer your question? Yeah, I mean, you can do it at any level, right? So when we do our inflection points, you guys, we do it based off of how close it is to an inflection area. So if the price point was at 500, right, I would look for the inflection point at 500, which is right here, right? 500 is a heavy inflection point. There's a battle happening right here, right? Once the sellers win, boom, right? Then this right here is another inflection area, right? 470 area, another battle. So you really just want to look at inflection areas as what's the closest price point that a battle took place with high volume, and that's what I want to look for when I'm either entering or exiting a position in that direction. So, TJ, anything you want to add to inflection points? I know that's your thing.
Yeah, you know, a lot of members asked us about the watch list that we post daily, so I can go over that. Let me quickly share my screen here.
There you go.
Thank you. All right, and you guys can see this screen, right?
Yes, sir.
All right, perfect. So we'll go through a few examples. So today we had ZM long over 400, short underneath. Now, again, inflection, like when you're looking at a support or resistance level, it's not going to be a defined, like definitive, like number. It's going to be that area. So as you can see on the volume profile, actually, let's go back because we made the watch list pre-market. So in pre-market, this is what we saw. We saw that the price rejected this for 12, came all the way down to 400 and moved up. So for me, this was a sign that, hey, there is some buyers over here that stepped up, and what I'm trying to look for is a dip buy back to this level, and if it hits that level and bounces off, it's a win. If it doesn't, what's my stop? My stop is really tight, right? Now, whenever I make these watch lists or even Drados, the first 15 minutes is always volatile, so I kind of try to avoid that time period when I'm doing this type of analysis. Sometimes we do take trades right out of the open, but that's when we have like high conviction on something. Now, as you can see, it kind of played out, and you can also see over here, oh, let me move this out of the way. You can see here that we started to develop a support level just underneath that level. And you can see how it kind of played out. So we tested back the 400 area and started to just decline, because you can see RSI is moving down. We have some resistance over here, and we started to just move down. So for me, this is, long over 400s, short underneath. Today was a good example where the market was just bleeding. So, it was easier to take the short side of this, as some of our traders did. And another example, let me take a look at our watch list. So we have Penn. So Penn was alerted by Bagamoody. We bought it around this range over here. And because I was long on this position, I'm like, okay, when do I sell? That's the question, right? What do I want to see on this trend? And as you can see, this is the start of today's. So for me, here's the level, 210. If we could break over that level, I'm bullish. I'll stay long. If we can't, I'll stay short. I'll start, scaling out. Now, here's a good, I guess, picture of like how you can use moving averages. So for me, I saw that we held the support. We have a double bottom over here. Strong support, strong volume came in. This one not as strong, and we have like an even atom set up over here on the double bottom. So for me, I was like, okay, as long as it holds above like that 200 range, I'm okay to hold on to it. So I just moved my stop up. I was hoping we can crash just like over that 210 and just keep running, since we did have a major gap, gap down. But of course, the news was pretty bearish, so we did not get that, and the market was bearish. The next one would be snow. So we've been shorting snow for a while. We've had positions actually at like 350s, 60s, you name it. We've been shorting it on snow. And as you can see, we came down, and I was like, okay, I want to reshort this. Where do I reshort? we had a major move down, so I was like, okay, I'm not gonna do what I did last time and not take profits when it presented itself. So I was like, all right, here's my key area. So as soon as we got up here, I was like, oh, it looks bullish. But then we started tanking down. And that was my kind of indication, okay, this is a good short. Let's just stay in it. I can have my stop loss over here. And I was actually targeting around like 375-ish. Right, so risk to reward wise, it was a pretty decent trade. We got even more out of this trade, and I'm actually still holding on to it. But the idea is like you want to find these areas of resistance or support. Not sure where my volume profile went. Oh, there we go. Magically appeared. And you're going to notice this on the volume profile. This is now an area where we have buyers and sellers fighting for price. When you have an area like this, and when I look at this chart tomorrow, this is the biggest thing that I'm going to look at. Are buyers going to take control or are sellers? As you can see by the volume, and as we know, volume precedes price, this is now going to be the next key area. So again, these support and resistance level change all the time, and as soon as it does, just delete it and make a new one. Another
We have a
example.
question.
Yeah,
So
sure.
the question was, why do you target when something breaks a level? Why do you target 375? And if you guys look on the left side at the level where TJ just pointed out, if that broke above, look at all the volume that's non-existent above it, right? So that means that there's not as big of a battle, and so it's easier for the price to move up into that direction. And so that's why our targets are always the next inflection level, which is where the heavy volume steps in at the next level. Does that answer your question?
Yeah, and we're probably going to see that often. Like, you'll notice that for us, this was a key area for us because, as you can see, I mean, there was a ton of volume over here. When we cracked underneath, now we're looking for the next inflection point, right? And we kind of got that. Like, I like using volume profile. You can see most of the volume was there. So to break this area, because within that day, you can see that we just like declined, right? But you can also see that we have support. We have like, well, it was previous support, now it's resistance. So that gives us a, I guess, like confidence to take that trade and stay in it. Because we know where our defined risk is. And we know the reward is great. Right, based on the fundamentals, we can probably see around 320s. So again, as long as you can mitigate your downside risk, you're going to be okay. Another example would be Zoom. Not sure if we did Zoom. Oh yeah, we did do Zoom. Let's go with Roku. So Roku is a play that I was long. You guys know I've been holding it from $100, and I'm like, when do I sell? I had another position at 200 and I think around 20ish, and every day I'm like, okay, when do I sell? When do I sell? Luckily, we had that huge breakout on Roku. As you can see, that was massive, and that's on a daily chart. Right, and for me, I was like, when do I sell? And it's not just me. Every single person that has held it from this support area, from the previous support area down here, they're all thinking the exact same thing. When do we sell? So we saw that we had some strong volume coming in over here and supporting the trend. We had lower volume over here, and now our RSI was like really steep. So for me, the biggest thing was, okay, if it stays over this 314 area, then I'll stay long. As soon as we got over there, just take a look at this divergence, right? This is bad in any level, right? Oh yeah, support and resistance, you can also draw it on your indicators too. As you can see, this acted as resistance, then it acted as support, and then it finally broke trend and moved up. You can do the exact same thing on your lower studies as well. And I think we shorted around here and targeted just on this break, because we saw that this was an area where, let me see if I can zoom in here. This was the only area of support. If it cracks this area here, it's going here, like for sure. And we know that this is like at all-time highs. So if it cracks this area, it's probably going to go down to here. And we got that today. In one day, we got literally the move that we were expecting. We had it crash below this level, and then it came down to this area here, and then finally down to the major support level. So that's why we use, support and resistance to kind of guide our decision making. And I hope that answers your question.
Yeah, exactly. Great. And notice this, to TJ's point, when you have a gap like that, right? We just, if anybody that was watching Snow over the last week and a half, right? Snow gapped up $200. And anybody who watched Snow over the last 2 days, Snow gapped down $120, right? And the reason was because there was no real volume profile levels between those because of the gap. And so it makes it much, much harder for people to hold positions when with their eyes. If with my eyes I can't see, okay, hey, this broke this level, but the next level is $10 down. Okay, I'll wait for that. If there's a hard gap, then that starts creating panic, right? Or this thing can go down because there's no set support and resistance levels. So that's why it's very important when things gap up, you got to set your stops very, very, very tight below that level where it broke out, or where it's breaking above. So
Yeah, and stocks tend to test support levels. You'll see it everywhere. For our premium members, we actually use SPY as an example. So we can see that, hey, we gapped up, came down, of course, the market came down. You see the support range. This was a nice critical area. We bounced at that area. Now, again, it's not definitive, like, okay, this is exactly where it has to bounce. It has in the past, that doesn't mean it's going to happen in the future. So we like to expose ourselves to a little bit more risk because we know that the reward could be much greater, right? Now, I'm going to just show you this part of it, right? So we know this is the strongest one, right? You see all the volume here. And POC is moving up a bit. So let's just highlight every single one, right? And now I'm just going to zoom in a bit more. You'll notice that these are the areas that we're going to be testing around. As we move up, you want to see this develop higher, and we did. So now we have support here. We had support / resistance over here, which was the previous high. So then now we're on a breakout. This is probably going to be our next support level, and as you can see, we kind of tested over here. If the market was to pull back something severe, we'd expect it to come at least down to this area because there's not as much volume here supporting that trend. And you'll see this on almost every ticker, every time frame. We can go on AMD, for example. And this was a nice breakout. We had beautiful support here, beautiful support there. Here, this is our only support. If this breaks, we have nothing until here. It is an easy short. Yeah, do you have some risk? Yeah, maybe I'll risk up to here. That is not where I wanted it. There we go. Maybe I'll risk up to there. But the reward is so much greater. And trading these price ranges or these price levels, and as you can see, we tested it multiple times. This is important. And today we pull back. The next pullback entry, like Drados mentioned, would be right here. We want to see it over here. This is an area to enter. I wouldn't enter over here because we don't have too much data here. And that's on a daily chart. So if we go on an hourly, let's see if that changes. So yeah, now we have resistance. Again, multi-time frame analysis is important. We can see that this is now the area that we should be monitoring. So if the market keeps pulling back, we should expect AMD to come down to these two ranges here, because that's the only level that there's any support. Let's say it moves up. We're expecting this to be resistant. So now we have a target. In the event the market pulls back and semiconductors start flying again, we now know where our target's going to be. And that's why we draw these, lines on our charts. It makes it easier for us to analyze what's actually going on. And as you can see, like when we zoomed out, we've been testing this range for some time now.
Exactly. Awesome explanation. Any other questions, you guys? I know we're about an hour over, so we want to respect time as well. But any other questions? And I know you guys have questions about indicators and volume profile and candlestick charts and volume analysis and all that stuff. So we'll do more in-depth trainings, right, regarding that stuff. Um, but I'll say it again: please don't just make a decision because of an indicator is doing something, or please don't make a decision just because something hits the support level. You got to take multiple things into consideration before you make a decision, right? And candlesticks, if you haven't read it, TJ, and now me, candlestick charting, Bloomberg's candlestick charting. If you haven't read it, I would recommend always having it by you and just going through it, once a day for 30, 45 minutes and just, acclimating yourself to that stuff. Also, Volume Price Analysis is a great book as well. That book taught me a lot about volume price analysis, and then obviously experience. But um, you have to take those two things also into consideration when saying, okay, I'm going to enter here. So it's not just, oh, this indicator did this, oh, it's at a static level or whatever. So please don't just make these decisions because you think these are the best. Learn everything.
Yeah, and we're gonna have more lessons for you guys, and I think the next lesson that we have planned is gonna be like a joint lesson, and you guys are going to love it. We just have to plan it out. We're probably gonna do it in January, so stay tuned. And if you guys haven't followed us on social media, please make sure that you do like, subscribe, and share this content because there's a lot of people that are misled by different indicators or that special setup. We're not trying to do that. We're trying to find a system that works for us and indicators that work in combination, in like incognito of each other, right?
Yep, exactly. So cool, guys. Well, thank you guys so much for joining. Hopefully, I didn't babble on too long about some stuff. Hopefully, you guys got some stuff out of this, and um, I appreciate TJ always for hosting this stuff and hosting United Traders as a whole, and not just for us, you guys. I mean, there's guys that do this on voice chat and inside of the voice chat or inside of the chat room. They do this all day, you guys. If you guys have questions, ask in the chat room. Ask us on voice during the day. We try our best to identify why we're making the decision with volume and all that stuff included. So try to listen, but we're here to help, and that's what we're here. We're not, we're not a paid chat room for a reason because we don't believe in that stuff. We believe in paying it forward. And if you guys want to be a part of this family, then all you got to do is pay it forward. Learn and give back. That's all we ask. So we appreciate you guys and your time, and hope you guys have a good rest of your day.
And Iman, appreciate your time as well. This was an amazing lesson, and can't wait to work on the next one with you.
Yes, sir. AMD's week. Let's do it.
Yes, sir. Take care, guys.
Later, guys.